The Hedgeless Horseman here. It's April the 12th, 2024. First of all, thanks to the sponsors. Second of all, just wanted to show this tweet. I thought it was a bit funny here. I mean, it sounds kind of ridiculous when you point out how people actually mostly behave in the market, and this goes for all markets. It's not specific to the junior mining sector. This is basically in anything that's tradable. You see the exact same phenomena, and we're seeing that right now. There simply is not a lot of appetite when something is cheap. People do not buy because it's cheap. People buy when they think they will make money in the short term. I bet, today, in this day and age, if a catalyst or potential catalyst is more than 2 months out, I think that is too long of a time frame for people to get interested. I mean, sure, when 2 months becomes 2 weeks or 1 week, yeah, then we're talking. Then people will get interested. So, a big, I think, part of investing overall is just, again, it's like play a game that nobody's playing. The Wayne Gretzky saying, don't skate where the puck is, skate where the puck is going to be. Because there's a bunch of juniors where it's like, if I look ahead a year or two from now, I can see totally different companies. Totally different. Some I think will have maybe made a significant discovery, as some will have improved on their discovery or their resource or whatever, getting close to cash flowing or are cash flowing, etc., etc. But again, nobody's really playing that game. And nobody buys cheap. People buy when others have already been buying. So this is just making fun of that. This is basically, I think this sums up a lot of people's mentality, that even though we fool ourselves all the time, that we're not actually doing stuff like this. I mean, you see excuses like, I think metals are gonna, have a breather soon. The miners know that gold is gonna top, or it always ends up with some kind of rationale for why cheap is actually not cheap, because nobody feels good about buying cheap, so they won't buy cheap, and then they try to, the confirmation bias. Then they try to come up with some explanation that does not make them dumb. I mean, because if you look at any junior mining chart now that's been around, or SILJ or GDXJ, whatever, it's like you see we have had a huge drawdown, a huge correction, lasted like 3-4 years, and obviously from objectively speaking, and especially given the gold price, there is absolutely no question that they are cheap. People like Ross Beatty, etc., says it's like they have never seen anything like it. Objectively speaking, if you're not buying now, there's no hope of you ever buying low or cheap, because it's never been cheaper in the last, let's say, 2-3 decades. That's the cold hard facts. Gold is at X price, miners are pricing in whatever they're pricing in. There's never been such a disconnect. It's never been cheaper, but are you seeing heavy volumes? No, some of these juniors are still lagging. And even if some are up 50 to 100% from those kind of levels they were up, they're still cheap because gold has just kept going. So it's like you cannot explain it. It's sometimes lately, especially, I feel like almost, I was going to say giving up on trying to convince people. It's like maybe most people who follow me, they're already in like myself. Then of course there's not much to do. If you 100% are convinced that they are cheap, you're already fully invested, and then it's up to someone else, let's say, to find to discover them and actually bid them up to somewhere along the lines of what one would consider fair value. But it's like, I mean, the in one way it's like you're not helping yourself if you get people to buy up, because you could just wait for okay, if there's 6 to 12 months more of this where they're this cheap, I'm just gonna make more in the future. If I set aside some part of my monthly salary, just buy up even more ounces in the ground when they're at fire sale prices, you're just gonna end up making more money. So in a sense, I mean, if Gold Junior started to go for real tomorrow, we might never see these kind of future returns in our lifetimes, which is, again, good or bad. I don't, in a sense, like, I don't really care. I just wish I had even more money. That's the problem. If I knew I wouldn't be able to get a single dollar more in dry powder, I would the bottom to be in today, because there's no opportunity cost. But if I know I'm getting money, and it's like, oh, the average invested dollar in this sector right now is going to throw off 300% within 2 years. You're not going to see that in many other sectors. And that's maybe a base case, 300%. Some might do much more than that. Some might do worse, but it's like on average 300%. You're never going to get that in the bank. You're never going to get that wherever. Could you get it in some crypto? Sure, but there's no margin of safety there. It's not a if question, not a when question, which is the case for miners right now. But this is literally how, if you translate what people are doing, this is literally how they're acting. People do not buy something until someone else has bid them up, and then they are getting convinced that they're cheap. And I see that all the time. And I mean, it kind of happens to me as well. It's like you buy something, you're so sure it's cheap. You keep on buying something. You're sure it's cheap. Nobody seems to care. You're the only one buying. I mean, some juniors over the last, well, now again, volumes are up a bit last 2 weeks. But before that, some juniors, sometimes I was the only buyer in a certain junior on a given day. The only person in the entire world who thought that this is cheap enough and this, I should have more of that. Or if I don't have any of that, I should have more of that. But given how many examples there are, the thing is, we should never have been this low to begin with. It's just crazy, but that is why every bottom and every top is a black swan event. Because from the bottoms, the future returns are outrageous. From the tops, the future declines are outrageous. And that's probably going to be like that forever. I have literally, again, I keep saying this, and I know it probably sounds arrogant, but I have no idea how one is expected to lose in a cyclical sector in the long term. If you see both cycles, not if you I bought in 2020 and it's like I'm down 50-60% going into the recent low, and it's like, okay, yeah, I mean, it's super hard to make money. Yeah, but that's not a full cycle. That's the bear cycle. Over a full cycle where you actually can average up, because I see people now who have seen some of the moves in these juniors. Now they're interested. Now they are interested. Some juniors are already past their, let's say, blown past and trading the highest it's traded in 1 year. So every single buy over the last 12 months in some juniors are now in profit. And if you actually did average down and you actually try to buy more and more the cheaper it got, I mean, it shouldn't be too far off from your let's say free rolling, but I know most people do not do that. Most people wait for them to go up and then they're not sure, and maybe they catch a short-term top and then it goes down and then they sell again because now they're convinced it's not the bottom, yada yada yada. So like my strategy is so simplistic, it's not even fun. It's like hard to believe. I just buy anything that I think is cheap. If I get money, I buy more of what I think is cheap. Uh, and more and more and more, all the way down to the exact bottom. I'm never gonna get the bottom tick, but I cannot afford not to average down, especially if I have already have high or big paper losses. Because when you have the biggest paper losses, it probably means the sector is the cheapest it's gonna be, and any dry powder is gonna have the highest impact on your future portfolio value. So the cure comes with the curse comes with the cure. But of course, in reality, most people do not see it that way. And then of course there's people who, let's say they're down and then we have an uptick in the juniors and they're like, oh, now I'm so scared, I think it's gonna roll over again, so I'm gonna be selling whatever. Because fact of the matter, I mean, bottom line is that this sector is still way, way too cheap. It is absolutely ridiculous. Gold above ground is at $2,390. You can buy it in the ground for, depending on the quality, the stage and all that, and I mean, producer it's going to be higher. But some of the better developers or advanced exploration plays, you can buy it for like $20 to $40 in the ground. What do you think the margins would be on those ounces today? I think they would have higher margins than like, $50 per ounce. Gold is at 2,390. And again, especially if it's, let's say a good project. It's absolutely ridiculous. And that's, I think, because of the Western investor. It's not the West that's buying up gold. They don't even know about this sector. They don't know about gold miners or gold juniors. So it's the East that is making all these ounces in the ground or ounces above ground more valuable, and by extension ounces in the ground more valuable. But nobody in the West is even realizing that, or the few ones who are realizing that, they're finding excuses not to buy. It's absolutely crazy. And I'm just gonna say, well, I was gonna say this earlier, but we're gonna look at some, or I'm gonna talk more, let's say, arm wave a bit about, like, why am I in this sector for? Why do I keep holding? Why do I keep buying? Why do I appear so, let's say, chill? Why am I memeing on Twitter so much? Why is this a no-brainer? Why do I constantly say nowadays, especially, it's like that I don't care about the short-term volatility. It's like there is nothing that can happen in a week, in a day or a week, that's gonna make all these juniors overvalued. So it's just again, the only way to lose right now, I think, is to sell. That's the only way. If you hold, or you, let's say, keep buying cheap, you're just gonna win even more. The only way to lose is to sell. So if I can keep myself from selling, I've already won, basically. That's why it's almost boring. So every trader, especially every trader, always says the market is always right. You hear that all the time. What's that gonna leave people with? Obviously, you're gonna get paranoid about everything, and I think you're even more so going to read in a bunch of stuff in every single move, daily move, minute move. You're gonna read even. You're gonna put even more emphasis on share price, I think. which I think is a big mistake. As a value investor, and I think it was actually Rick Rule who in a recent interview had a very good uh, way of saying it, and that's basically what I keep on saying. Well, I think he said something about, I mean, you have to figure out what you think the value is, and then you look at price. And he basically said that he thinks so many investors, they're focusing on price again as their due diligence. But yeah, and he basically said that price alone is meaningless, absolutely meaningless. It's only worth something, especially for an investor, long-term investor, as it relates to value. That's the only time price is relevant, when it's compared to value. Otherwise, it says absolutely nothing. An expensive stock can go up, a cheap stock can go down, a cheap stock can go up, an expensive stock can go down. So it doesn't say anything really. It's just if you don't have any idea of where you are or where you're going, it's like, how on earth are you gonna have any conviction? So and we as, let's say, investors, I mean, I think it's better to assume that the market is always wrong. Why do I say that? And why do I think now of all times is the best time to actually think like that? Because if you're only long like me, you know that the downside is always fixed if you don't have leverage. The worst that can happen in a single junior is that it goes down 100%. You lost the money you put in, 100% of it. What's the upside? Well, theoretically, it's limitless. And we have seen in basically every big sentiment change, from going from a sentiment low to a sentiment high, juniors across the board are up several hundreds of percent. In a downturn, they're obviously not down several hundreds of percent. The most they can go down is 100%. And we know they're super cheap. And people, if you are one of those like, oh, I'm gonna look at the price. What is the price telling me? This stock isn't moving. That means that, okay, the market is saying this, that it hasn't moved. It hasn't moved yet. I think it's cheap, but it hasn't moved yet. The market knows something. The market is always right. Okay, let's say you get shaken out. That has happened quite a few times for myself. It's like, again, you're convinced something is cheap. You average down. Let's say you average down, or it just stays flat. Whatever you average in, and it's like sooner or later you might be like, oh, maybe I would assume that someone actually, would agree with my take by now. So maybe I am wrong because nobody else seems to see what I'm seeing. And then you might throw in the towel and sell. And it's like, typically that's like you probably experienced this too. I mean, you sell basically before the day something happens. A news release comes out or someone actually starts to buy. So you are the last guy to throw in the towel. And in this day and age when gold is going higher, and if you have a laggard, at face value, that's getting cheaper and cheaper and cheaper the more gold goes, and the stock doesn't. So if you sell, let's say gold has gone up for 2 weeks, and the stock you bought didn't go up for 2 weeks, then you end up selling after 2 weeks. You sold it at the cheapest time through your entire holding period, which was, theoretically only 2 weeks. But it's like, by definition, you made a mistake. You bought it when it was less cheap, because gold wasn't as high then. You sold it when it was actually cheaper than you bought. And that's the beauty of it. Asymmetrical bets. Or I should say asymmetrical risk reward. If I think, hey, this junior could go up 500 to 1,000% over the next 3 years. If I'm wrong, the max wrong I can be is that it goes down minus 100%. If I'm right, because where the market is pricing that security, or that company, I should say, let's think as investors, if the Mr. Market is giving away all those assets for a price that I think is so low that I think the value is gonna be is 500 to 1,000% higher from here within 3 years. If I'm right, I make a shit ton of money. If I'm wrong, I can still only lose 100%. At sentiment highs, it's more the opposite. It's like a lot of the juniors are overvalued. And if you are a value investor, you might be saying like, I only see 30% upside here, actually, or even 30%. And let's again assume that we keep the metal price constant, because anything can get bailed out if metal prices just keep on going. But like, just let's say we freeze the gold price right now, and I'm assuming it's like the inflation, etc. Let's say it freezes, even though it won't, and even though gold won't freeze either. But like in real terms, let's say we freeze the gold price right now. There's plenty of juniors where it's like 300 to 500 to 1,000% is very much a possibility, or even more than that in the next 3 years. And it's going to be a higher, or the future expected returns are going to be higher the cheaper it is. So the more it's lagged, if it's actually even kept on selling down, and you still think that, no, I think it's actually going to be worth whatever in the future, and it goes down, that just means that if you're right, it's going to go up even more from those levels. I mean, if you have something that you bought for 50 million, you think it's going to be worth 500 million within 3 years. It goes down to 40 million. That just means that there's a higher delta, obviously, from 40 million to 500 than from 50 million to 500. So if you assume that the market is always wrong at a time like this, the times you're right are going to pay off so extraordinarily much that it's like you can afford to be wrong a lot. Now that doesn't mean, that's not an excuse to, oh well, if that's the case, I'm just going to do no due diligence, buy whatever crap I can find. No, we're talking actual value here. That's what we're trying to find out, actual value. Not just stock X, somebody says it's going to be worth whatever, and it's like in reality there's no shot that's actually going to be a mine, or even if they find something, it's not going to be big enough because it's so remote or whatever. No, we're talking actual value. We're trying to be sophisticated value investors. We're not trying to be just totally guessing, if you know what I mean. But my point is that I think people would be better served if they were a bit arrogant, because at least that's gonna, in people's minds, that's at least gonna dislocate the price, the idea that the market is always right, and that the price, whatever price anything is selling for, is always efficient. In that case, why are you even stock picking? If you actually believe the market is always right, what are you doing stock picking? I assume the market is always right, wrong. I think right now this sector is completely wrong. It's Mr. Market is a total moron. And that's why I think if you just learn the fundamentals of a cyclical sector, learn some due diligence, have infinite patience, infinite, let's say, discipline. I mean, it sounds worse than it actually is. We're not talking infinity. But like, if you can just average down, if something becomes cheap, you start buying. Cheaper it gets, the more you buy. Don't care how long it's going to be cheap. Don't care how cheap it's going to get. You just keep on doing that. Average down, and have some sense of like, yes, this is actually a legit company as well. I mean, we're talking, you can obviously make it a lot easier by simply averaging down in, let's say, Lundin plays that are going down. There's no guaranteed successes, but it's like probably almost a guarantee that you're not overpaying. That's the thing. You're not making a mistake. So yeah, and it's like, let's arm wave a bit. I mean, again, why am I sitting put basically? I mean, it's like Magna mining. And I wrote this in the forum today. I mean, it's almost a bit boring. It's like, in what world is Magna mining not cheap? And again, I'm not saying that, yes, this is absolutely 100% certainty of returning whatever. No, I'm talking about risk-adjusted value. What's how is not Magna cheap? Look at those grades, look at those resources, look at how de-risked it is, look where it is located. If that becomes a success, or I should say, if they get that in production and they do what they did in FNX, I mean, Jason Jessup has said himself, I'm not going to sell a share below $1 billion in market cap. It's that unfathomable to think that Magna's assets, and especially if they acquire another one, could be worth 1 billion one day. No, I don't think so. Why should it be? Why should that be impossible? I mean, look at some of their grades. Let's say they make a discovery or whatever, just the stuff they have now. I mean, Green Hill should do very well at today's gold prices. Will that fetch $1 billion market cap? I'm not 100% sure. But again, we're at this nickel price now, and we see people more and more getting contrarian on PGMs and nickel. So let's say Magna does get up and running, Green Hill, and maybe Shakespeare as well, and a third asset, and it just happens to be that, well, nickel actually has already put out in a bottom, let's say, and PGMs are close to bottoming. So in 2-3 years, PGMs are up, let's say 50%, nickel is up 50%, and Magna is producing. It's like around a $1 billion market cap, improbable or impossible at that time? No. So what's it pricing in now? I mean, well, that it's not going to be a cash flowing mine. So it's like I don't see it. It's like to me it's absolutely impossible that this is not cheap. And I know what I was going to say, how a lot of people think that they think cheap means a bottom or cheap means guaranteed success. No, I'm talking risk reward, risk adjusted value. In my opinion, there's no way that Magna is not cheap. All nickel in Canada, or if prices of nickel go down, I don't know, 30% more and stay there for the next 5 years or 10 years, and the same goes for PGM. So it's like, yeah, okay, that might make it not so cheap, maybe. But otherwise, I just don't see it. I mean, it's just absolutely incredible. And we could have bought it even cheaper not long ago. Almost the exact same asset, except that it put out some barn burner holes and did a offtake with Valley. But I think it's like that was more a matter of when, not if. But you could still have bought it for like 30-40% cheaper. Or I shouldn't say cheaper, but like lower price. I don't, and I said that at the time, like this should not even be possible. If one cannot say that this, in my opinion, one cannot say that this sector is hard, or it's hard to make money in a cyclical sector like the junior mining sector, given what we're seeing out there right now. Best opportunities in 30 years means it's the easiest ever to make future money in this sector. And it's like you almost have to try, you have to try really hard to buy something that's overvalued if it's decent to good to great quality now, I think. Like First Nordic. My upside case is I think this is going to be, I think Barsele is going to be at least 4 million ounces. I think they might, let's say within a few years, show that, assuming that's like, okay, they get operatorship, whatever. But like right now, I think the Barsele deposit is closer to 3 million ounces. We've heard Tosh Singh say that. That's partly, or a lot of this, that is simply because the assumptions in the resource were so conservative. $1,300 gold, Agnico did, MSO stopes, whatever that is, I actually don't know. It was like they punished that resource a lot. They used much higher mining cost than I think we'll have in Sweden. I mean, they're way higher than Rupert. I think they're almost like most of the cost assumptions are 50% higher than Rupert. So I think that's Agnico being Agnico, being the highest quality gold miner around, that they want assets that are, let's say, now they want even bigger ones, but like they do things, they don't mess around. They want to be absolutely sure it's going to be a good mine. So they use very strict and conservative assumptions because that's what they made. That's why they are at $35 billion or whatever. They are the highest quality miners. They don't put typically marginal projects into production. They don't want to gamble. They're not gamblers. They're probably the best mining company in the world from a quality perspective. So they punish their resources a lot. They don't assume anything just to make it look flashy. They do not care what retail investors think. They do their resources, etc., from a miner's perspective, a conservative, cautious miner's perspective. So I think they have 3 million ounces at Barsele already. First Nordic has 45% of that right now. I think they might end up getting 100% from Agnico, and maybe Agnico will ride the in equity within First Nordic, so they get exposure to the whole land package. In time, I think First Nordic could show that's who knows, 5, 6, 7 million plus gold camp. What could that fetch in Sweden, tier 1 jurisdiction? Certainly over $1 billion. There are 40 million now. Let's say we get dilution up to 80 million, including Agnico, including races or whatever, in the next 6-12 months. 80 million. I mean, that's in my opinion nothing. That's less than what. Less than a tenth of what Rupert is selling for right now. So I mean, I'm in Magna because I think from these levels it could do 500% to, I don't know, 1,000%, depending on what happens. But we're talking, in my opinion, it's like I'm in these for, like, they all have, in my opinion, massive upside, and they're dirt cheap right now. So I think some of these stores, I think probability of making significant returns on them, and that's even, let's say, with a flat gold price, if you know what I mean. It's like just the quality or whatever, the actual intrinsic value. I think they're probable multi-baggers. And that's why I have them in the hodl portfolio, especially where I don't really trade them much. Snowline Gold, well, that's a tricky one in a sense. I mean, it is probably the best undeveloped gold deposit out there. But of course you have the infrastructure and all that. But they have a huge land package. So what could happen in Snowline? Maybe Barrick or Newmont or Agnico Eagle. I don't think B2 might afford it. Maybe. I mean, they are the, I think, largest shareholder. But let's say they get acquired at whatever premium, and let's say it's the Rogue project that gets acquired, and then they spin out the rest of the land package, which is huge. And obviously, if somebody buys the Rogue project, that means, okay, they are gonna want to develop that. That means that someday there's probably gonna be much better infrastructure in that area, and all of a sudden the whole exploration land package for Snowline gets revalued. I mean, intrinsically or implied. Upside there, yeah, absolutely, I think so. I have sold off quite a bit, simply because I don't see a easy three bagger. Let's say I don't see that in Snowland. I don't see a probable three bagger. If the gold prices were fixed, let's say the metal prices were fixed, I don't see a probable three bagger. But you cannot take away the fact that they have the best gold deposit around. Are there other things that can again throw a wrench in that? Yes, absolutely. I mean, if you start to answer the unanswered questions like permitting and yada yada, then stuff can come up. But right now, at face value, nothing can take away that this is a tier one deposit. So it's like, oh, you know the bird in the hand is one of the best undeveloped gold deposits on earth. That's probably never ever going to be worthless. So I would say it's like in some sense huge margin of safety, or I shouldn't say huge margin of safety, but it's like a lot of meat, a lot of meat. So like I don't know what an economic study would show, but maybe a lot. I mean, Michael Gray put out a I think he did a economic study, or internal one, or however you would say it, and I think he expected all in sustaining costs or whatever for maybe the first years or something be like $400 per ounce or something. I mean, just outrageous margins. Would imagine, like, let's see here, let's say they produce 500,000 ounces, 400, let's say $500, gold at 2,300. I mean, that's $1,800 in pre-tax profit. Oh, 1 second. That's $900 million. That's almost the market cap, or that's around the market cap. So imagine what that mine would be worth in production. And given again, if those margins are correct, it doesn't actually. It would be a tier one deposit. It would make money when no other mine really would make money. So it's a tier deposit if gold is at $1,000 or $5,000 an ounce. Anyway, Headwater Gold. This is very much a longer term play. That's what I like, especially with. I mean, let's think of Headwater Gold. It's like, what is the next obvious catalyst? Is there an obvious catalyst? I mean, they're going to be drilling at Spring Peak, which is a discovery. But like, I think the case for Headwater is simply they have 12 projects handpicked by an ex-head geo of Kinross. They brought in another guy recently. I think he was the ex-head geo of Newcrest or something, very recently. 12 projects, a discovery already with Newmont, 17 million market cap or something. Is there some upside there? Yes. Is there a good management team? Yes. Do they have a lot of skin in the game? Yes. Are they gonna do everything they can to create as much value as they can? Yes. Will that value will the probability of creating value increase with time held? Yes, I think so. The more they can drill, the more they're going to prove up, the more they can think about stuff and find new projects, whatever. So this is one of those cases where it's like what you want to see, that management is the friend, or a time is the friend of a good management team, and especially a large pipeline of projects, etc. Because if we would jump in a time machine, and I would jump 2 years from now, we don't know what the world is going to look like, whatever. Do I think Headwater will be worth more than today? Yes, I absolutely think so. Do I think the share price, the market cap, will be higher than today? Yes, I think so as well. And then if we're talking blue sky, let's say Spring Peak is a legit new epithermal district. Would a mine worth $1 billion be totally out of the question? No, I don't think so. Obviously, it's going to take more work, etc. But they can make a discovery in some other place. With 12 projects, there's a lot of things that can happen. So it's like, if you need precision, this I think is very important. If you need precision, then it's by default not a no-brainer. Or if something hangs on the very next news release, then it's not a no-brainer in my opinion. We want to be front-running, like I said earlier. Most people don't see beyond 2 months ahead. That's already a stretch. I'm all of these juniors. If I pretend I go in a time machine and jump 2-3 years. Let's say 2-3 years to give some slack. I think every single one of these are probably going to be worth more than they are today, some significantly more, and I think they are gonna be higher priced as well. Because value is one thing, price is another thing. But value is the guideline, value is the signal, and price is the vent or tool or whatever how you would call it. So Headwater 17 million. That leaves a lot of room for the upside. Goliath Resources, I think they're at 100 million or something. They might have a multi-million ounce deposit in BC, Canada. Might be many million ounces. Might make other discoveries because they seem to be finding gold and silver all over the place. That's almost like could be a district play. What is 100 million CAD pricing in? Is that pricing in a tier 2 deposit in Canada? I don't think so. What could an actual legit multi-million ounce mine be worth in Canada if we're even close to these gold prices? A lot. Several hundred millions to maybe a billion plus. I mean, Great Bear got bought out for $1.8 billion, and they have, what, 5-6 million ounces, I think? Not super high grade. That's what we're talking about. Like, is it impossible? No, especially if gold does better. I mean, Great Bear was acquired when, I don't remember what the gold price was, what it was in the 2,390. Western Alaska. What's the market cap of Western Alaska? $37 million, and I talked about them recently in the what did I talk about in the gambler portfolio. 37 million. They got 75 million ounces of 977 grams per ton AG equivalent. They have silver, lead, zinc. Zinc has actually done well recently. It looks like, I mean, I don't know, it's starting a new leg up, whatever. Silver is obviously rampaging. 37 million. 37 million. What kind of mine is that pricing in? Is that a pricing in a economic bonanza deposit? Or economic bonanza mine? No, I think, again, that it's probably gonna need, maybe, let's say they double this, and then we're really talking like 150 million ounces AG equivalent. What's the odds of them finding that? Assuming they drill, I think there's probably about 50% chance that they're gonna end up finding 75 million ounces AG equivalent, more than they have now. If that makes that jump to a very economic, high-grade mine, what could that be worth? Silvercrest was over $1 billion. I don't know what it's at right now, but let's see. $1.47 billion. That's also a bonanza grade silver mine. Might have more silver though, more precious metals, but still, margins might not be too far off. So this is basically what I think, a number that's like around blue sky for Western Alaska. It's at 37. Why is it so low? And I talked about this. The market is front running financing. That I'm pretty sure of. So again, market is short term. Most people focus on the next news release, because this doesn't make any sense at all. But nobody cares about the price to value, because everybody is expecting the next news release to be a financing. And if you're bullish Western Alaska, you certainly do not want it to go up if you expect to be in a placement. It makes total sense. Again, based on the short-term expectations and short-term incentives for anyone who's actually bullish and wants to be bullish in bulk. Makes sense why it's not up. I80, I talked about them recently, I think, as well. They have, I mean, I don't think it's closed. 500 million, they're raising 100 million. Let's say they're up to 600 million CAD. I don't even remember how many ounces of gold and silver they have. They have the CRD system. I don't think that has a deposit. The sum of its parts is probably, if I had to guess, multiples of this market cap. Think about how hard it is to find high-grade deposits in Nevada, where everybody loves to mine, and a CRD system which is basically intersecting a gold system. You're starting off with what, 200 million ounces of silver, 12 million ounces of gold. Don't quote me on that. It was like it's a crap ton. They have a bunch of permits. They have an autoclave or whatever it's called, a roaster, 103 in the US, I think, or at least in Nevada. The sunk costs alone are like, I don't know, 1.5 billion or something. It is absolutely, in my opinion, ridiculous. I don't know. Well, I've talked about this before. I kind of like, or I especially like multi-asset juniors because the market only focuses on one project almost at any point in time. If all their projects would be split up and spun out, I do not think the combined entity would be priced at 600 million. Not even in this crappy market. So this is like, in my opinion, this is kind of like Magna, but in gold. But what I like, I mean, yes, we have to play the game as well. We know the law of big numbers or large numbers, that some people look at the market cap and say, well, it's higher. It's not as easy to move as a 20 million market cap company. And that's true. That's also true. I mean, there's merit in that from a trading perspective, at least, or a sentiment trading perspective. Still, if we're talking full-blown margin of safety and all of that, I mean, what other non-producers have these kinds of assets and would be trading at 600 million? They have extremely good-looking projects, and that's obviously why somebody's... well, I thought they upsized it, yeah, to $100 million. So obviously a lot of people think this is really cheap. But this kind of action is like, makes people believe that, well, you can't make money in this sector. Look at... But this has been all through a bear market, the worst one since 2012 to 2015. And yes, they've diluted along the way, but think of it, what is the actual upside from 600 million market cap with 100 million in cash? Let's say gold stays up here. It's like, what of those development projects they have is not going to make money at this price? I mean, they should make a lot of money, and they have over 10 million ounces of gold, 100, 200 million ounces of silver. It's like they're still discovering stuff. Sunk costs for 1.5 billion. No, it's just one of those anomalies. And it's like, don't, in my opinion, overthink it. Just know that it's like what Buffett says, that when he gets asked what is intrinsic value, whatever, it's like, well, or why does value investing work? And he's like, well, let's call it an invisible hand, a magical thing that for some reason, whatever, it's like a stock over the long term is going to gravitate to its long-term value, intrinsic value, which nobody knows exactly what that is. But if you're somewhat in the ballpark, and that ballpark is quite a bit higher than the current price, then you're probably going to do okay. Auro Resources. $125 million CAD. Huge, here's the zinc chart. Huge polymetallic resource. Lots of drilling left to do. This project would probably be, I think, very economic, even in this, I was gonna say, semi early stage. Uh, if they did a PA, I think this would be worth a lot today, especially with more infill drilling proving up, that higher grade core. Because San Cristobal is making money today, quite a bit of money, I'm sure. So I think, I think this is kind of already a mine. I mean, at these prices, it's already a mine. But let's say they beef up Iskisk even more, delineate the higher grade zones, then you have another San Cristobal, basically. Selling for 125 million CAD today. Jurisdiction might be at least in terms of perception, the hardest part. But we've gone through a lot of perception problems, like the arsenic, the super low grade, the whatever, and they still can put out. Where is it? I mean, the bulk samples, for example, surprise to the upside, intersects 57, yada yada, 139 grams per ton AG equivalent over 136 meters. That should be very, very economic today. Bulk mining, that kind of stuff. So where could Eloro go? I mean, of course, it depends on drill success and yada yada. Still, I mean, if they released a PA, I mean, I think the almost only natural fit is one of the really large miners. Because this would probably be a $1 billion capex, end up being a mine that could run for decades. So I kind of see it as a porphyry play in a sense. But it's not copper gold, it's silver, lead, zinc, and tin. Do I know exactly what's going to happen in Eloro? No. From an economic standpoint, do I think this is really, really cheap? Yes. What happens if again they put out a PA, silver keeps on rocking and rolling, Bolivia gets better press, let's say? Yeah, I mean, it already was up at, I think this has already been at 300 million, etc. And that's obviously not in a super hot silver market. So we know that, 300 million, the market has been prepared to give that to Eloro before. And the MRE, the maiden resource, that was a disappointment, but we kind of know why, because there was not enough drill spacing. So the model kind of assumed that there would probably be a lot more waste and lower grades than it actually will be, since they've kind of shown now that yes, they hit high grade bulk mineralization where the model assumed there would be waste. So I think Iska is probably going to get transformed a lot, and I think it's going to end up being one of the largest discoveries in total tonnage or metal content in the recent years. Red Pine, just in my opinion, a basket case. Companies aiming for 1.5 to 3 million ounces in the next MRE. I don't know exactly when that's going to be out. I think it's second half of this year. And again, like always, people don't buy. That's too far away for most people. And the problem with that is, let's say you have a catalyst here, or I should say, let's do it like this. Let's say there's a catalyst here. Well, now that doesn't, since it's bloody monthly short. Let's say there's a catalyst here. And people get exponentially more excited the less the time frame. If you know what I mean. Let's say a curve. So it's like excitement probably gonna go something like this. I hope you get my point. It's like we as investors, or Western investors overall, have never been more impatient, instant gratification and all that. So I think the the more things you can front run that you think is going to lead to a positive outcome, the better. Let's say I'm going to do it like this actually. I mean, this is actually typically why you see almost all stocks going zigzagging like that. Not only from news releases, but like you kind of can get it from a sentiment perspective. Let's say I'm gonna do it like this instead. Let's say these are news releases, times of news releases. And let's say this is like 3-4 months before a news release that we expect to be positive and that we think the market will start caring about when it comes, or when it's imminent, let's say. So, and let's say the start date is 3 months. I think actually that's enough. Again, I don't think the market has a lot longer time frame than like 2 months, and that's even a stretch for a lot of people. So what I think happens is, or what I think we should think about is that if we think this news release is going to happen at whatever 3 to 4 months from now, nobody cares right now. Sentiment is low. Nobody's excited about that. Yes, a few might point that out, but like there's no buying, and you're sitting there thinking, well, I mean, when the PEA comes out, let's take Elora is an example like that. That should show that this is, let's say worth easily over $1 billion at today's market metal prices. But now that's too far off. But as time passes and it gets closer and closer, excitement goes up. Let's say exponential as it relates to time to excitement or exciting catalyst, whatever. So like when we're really close to the PA or assay results or whatever, you know the deal. It tends to get very, very exciting. That's what everyone is talking about, waiting for the assay results, waiting for the PA, whatever. And then let's say it comes out, and then there might be some sell the news kind of stuff, because everybody bought in here because they were expecting it to go, just continue higher. So you have a sell the rumor event or whatever. Okay, so now that has passed. Now there might be 3 months to the next material news release. I'm just making stuff up now, obviously. So okay, sell the news, we start to get some downside momentum, because when people see that, there's no obvious catalyst in the next week or two, then I don't really care. And now the share price looks like it's topped for now, no money to be made here. And of course that starts to sell off, and that eventually get weaker and weaker hands to sell out lower and lower, yada yada. But then we're getting closer and closer to another news release. So the whole cycle starts again, and then there might be sell the news kind of thing, especially if it's an expected news release. And then we just redo that, but it's like if they just keep adding value, we have a intrinsic value creation line that goes something like this. But you will, or maybe it goes actually something like this. That's why it's like you will see a lot of the swings around intrinsic value simply thanks to short time horizons for investors, and how momentum works, and how excitement for people works, and how it relates to time. So there's no 10 bagger that goes straight up. They go through all of these cycles. Great Bear dropped 30, 40, 50% a couple of times, 60% one time, etc., etc. And you have these lulls, and then they get exciting because people are excited or expect a news release, then that's passed, yada yada. So if you're a sentiment trader or whatever, it's like if you can buy it in the boring period, that's great. It's typically cheap. It's lower than the value curve, so the risk is probably to the upside. It's gonna get more exciting. That's how I feel with some juniors when you end up, let's say, selling You hold something like nothing happens, nothing happens, nothing happens. You sell out, and it's like the next day there's a good news release. I mean, common sense would tell you if you haven't had a news release for 2 months and the company's working, then we're up to 3 months, no news release. I mean, we are by definition getting still closer and closer to the actual news release. And obviously, you can work and do more stuff in 3 months than in 2 months. So there's probably be more content in the news release as well. But that's I mean, this is how I think one should really think, and that's why it's like buy the dips. Buy the dips is a truism, and especially if, again, you think you're right on value. And then you have a lot of these short term to medium term cycles in between, sentiment wise. But yeah, so Red Pine, 40 million CAD, Almo's largest shareholder. They are aiming for 1.5 to 3 million ounces in the next MRE, in the next resource update in Canada, in a mining camp. A lot of exploration success still. I mean, some, like Quinton says, I mean, hey, this looks like kind of, like Great Bear started out. And of course, Great Bear, I think, we're up to 5 rigs. I think Red Pine might have 2. I'm not 100% sure. They're not as aggressive as Great Bear, and right now the company doesn't have a CEO, which I think brings a lot of confusion. But Quinton touched on it, and there's been stuff here, I think, in the forum, the rumor mill. I mean, I'm not saying that he's gonna come on, but let's say some guy like Chris Taylor comes on, the Chris Taylor from Great Bear. What do you think is going to happen with this story in that case? Just that signal value alone. And if we're thinking from a value perspective, what would 1.5 to 3 million ounces of like probably decently economic gold in a mining camp next to mid-tiers and majors be worth in Canada, where it's like this project would probably be easier to permit than most others, so you have that as well, and then you factor in the current gold price. Is several hundred million out of the question? Well, I don't think so. Again, Great Bear was, I mean, it's not apples to apples, but Great Bear ended up after 500,000 meters of drilling to be, I think it's 6 million, maybe 5, 6. Anyway, let's see 1/3 of that at a much higher gold price. I think this is one of those cases. I think this is going to look ridiculous in the future. I truly believe. I think this is one case where it's like recently gold's been going up, Red Pine has done this, frustrates people, and you're like, oh, maybe I was wrong, maybe it's not worth much. There's somebody selling, the market is always right, whatever. I mean, then you can also see just how again these small sentiment cycles. I think this is. I mean, if you're convinced about the value, how worried are you going to be? Let's say in your mind you're like, no, I think Red Pine is worth 300 million. Let's say you think that, or 200 million. Would it be hard to buy Red Pine? Would it be hard to buy it if it went from 47 million to 40 million or 40 to 35? No, because in your mind it's like a rounding error. You're just going to make even more. I mean, from 40 to 300, that's a big jump. From 35 to 300, that's an even bigger jump. Condor, I'm not going to touch on that a lot. I recently talked about it in the Gambler portfolio. Let's just say big portfolio, a lot of projects, and they're going to be drilling with tech this year, I hope, on Cobra Orco, for example. So again, long pipeline, legit, let's say mine finder or finders. Come back in, let's say 2-3 years, if they make a discovery, Condor is going to be up a lot. That's simple as that. Mawson Gold, their flagship asset is their shareholding in Southern Cross. This could be like I'm not going to say Foster wheel, but like Foster wheel-esque kind of deal. I mean, I think the market cap for Southern Cross is around 400 million. CAD, I'm pretty sure. Maybe a bit more actually now. But like, is that cheap at face value? No, but this looks like it's for sure gonna be a mine. And some would probably argue that 1 million ounces here is worth, with these grades, is worth somewhere between 400 to 500 million per ounce. So in that case, excuse me, if the market cap is 400 million, and you think that this could be, who knows, 2, 3, 4, 5. I mean, they have a lot of strike to explore. I think they have their exploration target. Let's see. Okay, so this is the exploration target in this picture. 1 to 1.6 million ounces. Okay, that doesn't sound like too much, but again, it comes down to the economics, and that's what I've been trying to say with, First Nordic. It's like it's grades that look low for Canadian investors. They're not low for Swedish mines. Like there was, Boliden just are about to expand the Aitik mine, and for them, relatively high grade open pit grades are 0.25% copper. Most places in the world you wouldn't build a mine with even that, and that's their relatively high grade. So that's why it's like, if you look at a dollar per ounce basis, Southern Cross and Mawson probably looks very expensive. But if you think that, okay, let's say 1 ounce here is legitimately worth, the value is around $400 to $600 because it's going to be such a, let's say, high grade operation. So the economic value per ounce is $400 to $600 in the ground. Then it's pricing in 1 million ounce or less, depending on if you attach $400 or $600 per ounce. Well, what's the upside? I mean, this exploration target here is 1 to 1.6. If it's 1.6 and you use $400 per ounce, that's 60%. And if you, I think they're bringing like 6 drill rigs or something. So, and that's in this window here. And I assume it's open at depth, and who knows, maybe it will do something like, Fosterville did, that you will have kind of a swan zone. There's a lot of stuff left, but their exploration in target in this picture is 1 to 1.6 million ounces of high grade gold. Is there upside? I mean, yeah, if they hit 1.6, there might be upside just from that, and that it might be more here. And then you have this 11-kilometer mineralized trend. Great backing, so they, with 6 drill rigs, you have to have good backing. Pierre Lauzon is in. So, just from that alone, if this becomes 3 million ounces, that could be more than, a 3x from here. 3 to 4x. Because that's that's a really good mine. And, if we assume that, hey, it's probably going to be at least, their exploration target is probably going to be legit, then you have a mine here. And I don't know what the economic value would be on 1.6 million ounces, but like, let's say it shows a MPV of, I don't know, 600 million or whatever. It's like, you're in one sense, you might have your downside taken care of. Because the problem is, if it's pricing in 400 million and they don't even have something economic. This looks like they very probably will have a mine. The question is more how big. That's what I think about it, at least. I'm hodling this still, because I think this is going to continue to grow, and I think there's a potential multi-bagger left in the tank, even at 400 million. Altamira Gold, yeah, I mean, I talked about this recently as well. Pretty straightforward story. They have 700,000 ounces in the ground right now. Maria Bonita is, I mean, we're waiting for the first grid drilling results from Maria Bonita. Let's say Maria Bonita ends up being 1 to 2 million ounces of near surface gold with good grades, good metallurgy. So they have, let's say, 1.7 to 2.7 million ounces at least, plus the saprolite deposit. I mean, that's a good mine. Aura Minerals, which is an investor, I don't think any of their mines is even up to 2.7 million ounces. So that would make it, if they acquire that, that would probably be the most, well, the largest mine they have. Don't quote me on that, I'm not 100% sure. But it would be at least one of the larger ones they have. So that would be a legit mine. I mean, let's say 1 gram per ton near surface in Brazil, with saprolite added to it, and market cap is 27.5 million, with, like, I guess they have at least 5 million in cash still. No, I mean, pricing in almost no chance that Maria Bonita is going to amount to anything, or the saprolite, or the central deposit. If it does amount to anything, yeah, I mean, 5-10 bagger, I don't think that's out of the question. Inflection Resources, I think I talked about it this recently, but I'm going to talk about it more in depth soon, because I think it's one quite unique story. Obvious multi-bagger potential. Greatland Gold got up to, I think, over $1 billion on their Javier stake, 30%. Inflection is at 17 million or something. And they're looking for very large copper gold porphyry targets, billion plus candle price. 1 billion, including their NSRs, etc. That's 250 million plus NSR, which someone would equate to 2% NSR would be kind of equivalent to 10% project ownership. So that's 35. So that's 350 million. That's a 20 bagger in if they find something worth, let's say, $1 billion. Is that a guarantee? No, but if they hit, it's like, yeah, potential 20 bagger from one $1 billion discovery. And they have 24 target areas, 6 targets at Duck Creek alone. I mean, honestly, if the amount of targets, their exploration efforts, the ground, 5 to 10 juniors or more could be sharing that ground and have, like, that's their flagship exploration target. Macquarie Arc copper gold porphyry ground in a neighborhood where you have Cowell, North Parks, and Cadia, which are absolute behemoths. Cadia book value a few years back, $10 billion. 10 billion. 10 times the threshold I used of 1 billion. The upside is insane, and what I like about Inflection is the fact that they have so many kicks at the can. They own more land, they own a longer strike than the combined strike, I think, between North Parks, Cowell, and Cadia. So theoretically, just based on the, let's say, balance of probabilities, one could say there ought to be a Cowell, and North Parks, and Acadia, assuming it's like, copy-pasted the geology. Just if we're just talking the strike. Yeah, this is, again, I mean, it's for the long term. This is one of few pre-discovery plays I am really, really bullish on. Simply because they have so many kicks at the can. District Metals, again, I mean, it comes down to, first of all, the uranium moratorium. 15th of May, I think, a report is supposed to be handed to the government or whatever. to give them a recommendation on if they should lift the uranium ban. And if that happens, if we get a yes there, if they recommend lifting it, and it looks probably likely they are gonna lift it, I don't know what's gonna happen. I don't know, and I don't know what uranium is gonna do and all that. Seems like a lot of people are still very bullish on it despite the big run. So I don't know. Could I say a multi-bagger in if they lift it? Yeah, can. And I would really like them to spin out the base metal projects because I think they could get at this valuation. I mean, again, since the market is getting a bit better. I mean, let's say they get 30, 40 or something for their base metal projects. Because if they spun out the base metal projects, I don't think the current market cap would go down that much. So let's say it drops to, what is it, 50? Let's say it drops to 40 and you get 30, so that's 70. So let's say it's like, whatever, 60% just from a spin out. So I think there, but of course that also can be derailed if the recommendation is no. So that's, in the short term, that's more a high risk, high reward story. But is there, multi-bagger potential? I mean, they own the second largest uranium deposit on planet Earth. Regardless of what you think the value of that is, I think it's material in the eyes of the market. Stillwater critical minerals, I think it's, again, I mean, to me it's a no-brainer. They just did a small financing, and of course that, I mean, I was gonna say no surprise there really. That's like, yep, market knows there's gonna be a financing, and they were quite open about it. I mean, they had it in the presentation. Yep, financing probably coincided with the bottom. So this is the stuff you have to, I think, I mean, pick up stuff like this. If you see a stock where you're like, how in the hell, why in the hell is this going down when it's already so cheap? That typically is because there's a financing around the corner. And instead of like everyone else, like, oh, this crap, they're, diluting again, whatever. Now I'm done with this. Oh, a financing after it's been down, whatever. I mean, oftentimes that kind of marks the bottom, actually. And you might have been 100% right that it was cheap. Let's say you bought here because you thought this is really cheap. At 23 cents, this is really cheap. And you might have been totally right and still had, let's say, whatever, let's say, 6 months of downtrend. And to top it off of financing. But it might have gotten cheaper. And the upside might be from here, let's say, who knows, but like in the future, maybe we'll learn that from here, it was going to return 500% over the next 2 to 3 years. From this level here, it's going to return 600 to 700%, whatever. It's like you would be happy with both, obviously. Or should be happy with both, I was going to say. But let's say they make, oh, Jesus, okay, they hit a hole and it's like hit a feeder zone, whatever. It's like, oh, now I understand why the, ex-Ivanhoe guys are in, or Glencore. I mean, we simply don't know exactly what's going to happen, but it's like, what is this reflecting a Glencore / Ivanhoe geologist kind of project? Absolutely not, of course. In the US, where it's like, I mean, like this, Morgan Stanley predicts massive investments in the US metals and mines. So I think there's a lot of tailwinds as well behind the scenes that almost nobody. I mean, let's come up with a blue sky scenario. Russia or South Africa shut down PGM mines, nickel mines, whatever. Nickel prices starts to go up for real. There's more turbulence geopolitically. The US gets even more paranoid about securing critical minerals, and it's like you have a huge deposit here in the US near where there, near a mine and near a historic mine that I think got a grant from the US military, their chromium mine. They make some discoveries, like proves this is an absolute behemoth of a system. We have a PGM and nickel bull, and the US is throwing cash at miners to try and get them to quickly shore up the domestic supply. I mean, what do you think that could trade at? Who knows? I mean, is 300 million out of the question? I don't think so. If this is legitimately a what's it called, the Ivanhoe? I don't remember the name of it. I had it in my piece on Stillwater. I mean, that's kind of what they think it might be here, like another, I mean, world class nickel PGM deposit with high grade structures actually. If that ends up being true, I don't think this market cap is going to get even close to the long term value of such a deposit. But it's going to take time. It's going to take drilling. It's going to take time. But again, we're like, what is priced in now? Is it pricing in a bull market in PGMs and nickel anytime soon within the next 2-3 years? No, I don't think so. Is it pricing in any kind of, they really, hit a hole where it's like, oh, now it's obvious that this is a huge system or whatever? No, I don't think that's the case either. So I think a lot of negative things is priced in, but almost no positive things is priced in. That's what we want to have. It's like, what could go right? Again, downside, and this goes back to the symmetrical risk reward. Downside is limited. But if I think, hey, I think Stillwater is going to trade for 400 million in 3 years. The market obviously does not say that, because that would be an absurd return, which we often see in the junior mining space though, which is the funny part. At the bottoms, no junior is pricing in the returns that are going to come. That's what I mean by every rally is a black swan and every crash is a black swan. The market, it always catches the market completely off guard. So this is not pricing in that there's going to be any sort of rally anytime soon within the next 3 years of any significance. Is there a shot that actually might happen? Absolutely. Macro shots, company specific shots. That's all. It's like, again, no need really for precision. Aim for the stars, hit the moon, if you know what I mean. All I know is that I don't think Glencore would spend a single dollar on this if they thought this was a fair risk adjusted value, meaning there's no chance you have something of significant value. And I don't think they would get ex-Ivanhoe big shot geologist on board if they thought that this price was right, signaling you have no shot at finding something of significance. Would they get out of bed for that? No, I don't think so. Would Glencore even bother with the paperwork needed to even spend, $1 million? No, I don't think so. That's all. Pretty simple stuff, actually. I mean, it's like more on math. Yeah, I think that's about it. A super long rant. I mean, obviously, I wasn't able to cover all, juniors I own, etc. But it's like, this is what I'm thinking about. I'm thinking that a bunch of these I'm in these types of companies because I think they have several hundreds of % of upside ahead of them. Not that every single one will. Not that I know exactly what the future is going to hold, where gold or silver or PGMs or nickel or whatever is going to trade within the next 3 years. But I think pretty much all of them either are very, very cheap based on where the metals are priced right now, assuming they have, like, let's say, margin of safety, like Magna Mining, First Nordic, Snowline, what Goliath, probably will have, what Western Alaska probably will have, what I80 Gold has already, what Elora has and probably will have in the future, what Red Pine probably has right now. High risk, high reward more what they probably will, what they have right now, and probably will have what they have right now, and might have probably, perhaps, in the future. High risk, high reward, maybe. Very asymmetrical. District metals, again, asymmetrical in a sense that it goes down to uranium, and also here they have a huge deposit already, lower grade but still, and it could be a massive one. So like I think it's pretty simple. Again, I don't want, if Stillwater was trading at 200 million, it's like, okay, obviously there's some chance of a significant mine priced in at least. Or if Magna Mining was trading at 500 million, and it's like, okay, yeah, I mean, could it go up from there? Sure, but it's like maybe not a no-brainer actually, because I mean things can go wrong, and nickel is not that high, etc., etc. But at these current prices, I mean, I think there's a lot of stuff that can go right. I mean, I think there's a lot of these companies I could consider have base cases that would have them undervalued by a few 100% at least, and if things goes really well, could be a lot more than that. Yeah, simple as that. Thanks for listening. Obviously, consider me biased. Do your own due diligence. This was just a arm waving kind of deal. Obviously, I'm talking my book here. Some are sponsors as well. Twice biased. Yada yada. Don't go all in on any single stock. Diversify so you can afford to be unlucky or whatever. And I just don't. I simply think that, I mean, there's so many good risk reward cases out there that you can have a quite diversified portfolio, and I still think that the future return of the portfolio would be very significant from these levels if you hold it long enough. I mean, many of these cases, especially if they're more exploration focused, they can't even prove up a lot of value in a month. If you hold them for a month, they might have drilled 3 holes, let's say. If you hold them for 3 years, they might have drilled 100 holes and then triple their resource, stuff like that. I mean, again, hold the long-term perspective. Thanks for listening. Not investing advice. Bye.